Hello guys, welcome to this week's YouTube video. I wanted to do something a little bit different this week and just have a little analysis of Bitcoin, just to see if the current state of cryptocurrency makes sense in terms of the way that I look at price and in terms of the analysis of where it might be dropping to, where would be the most high probability area, and when we could see bullish moves again. Potentially. So yeah, let's just get straight into it. This is the monthly, so we'll go right back to the beginning, the humble beginnings of Bitcoin back in 2010, and you can see that if we zoom right in here, we have our first Bitcoin bull run, going from around less than $1 all the way up to $30. Okay. Now, it's funny because if you look at the first Bitcoin bull run, it looks exactly the same as the ones that came after it, just on a much smaller scale. But if we take from the very low to where we cemented the high, just take that as our first leg of price. You can see price pushed up, came back down to the discount, wanted to get to a decent price level, back to $2, and then pushed up. And this either means that, this is the way price works all the time. It has an impulse, correction, then an impulse again. And, you could theorize as to why that happens. Who knows? It could be that people in the know at this point want to get price down to a level to get their orders in more and, just get as many orders as they can in at this level down here, and then price pushes up again. But that is the way markets work all the time. Price goes up and down, basically. So you see we have a mitigation in the discount, so that for me is a major break of structure. So there we go. We've got our first Bitcoin bullish major break of structure there. And you can see we have the next leg. We have another high here. However, it's not a swing high because none of these candles cemented. So we have to go all the way up to here. I guess the second crypto bull run, which took us all the way up to $1,241. And then what happened after that? Again, the same thing. We had our impulse, we've had our correction. A bit of, internal structure in here. But yeah, ultimately price pushed up again. Okay, so after that is again a mitigation of the discount, and we have another major break of structure, and then again. So if you look how small that first bull run looks compared to this one, and now look how small this one looks compared to the next one. Very fractal, this price. So yeah, once again, we have the next swing low down here. The next swing high is up here. And you can see that price push down into this discount, mitigated a valid zone, a fairly nice looking zone, I guess, before continuing up like this. So again, another major break of structure. Okay, so pretty valid so far. Expectations, and again the exact same thing happened with the next bull run, kind of dwarfing this one. But what happens at the top of this one is very interesting. Okay, so just mark on our swing range from this low to this is the cemented high. Then we came down into the discount. We mitigated a zone, which would be this wick in that discount, then pushed up. But as you can see, you know, we just wicked above this. We didn't manage to get a body close above this high. So that, you know, is a bit of a warning sign, I would say. So for me, this means that price didn't have enough juice in it to close above this high after mitigating this level, this demand level. So what that most likely means, and what we could expect after that, is that price needs to come lower in order to continue up if it's going to. So it's actually come down to the next level of demand here. Now this could be the level that it goes from. This could be a valid level. Is that completely equal lows there as well? 585, 575, close enough. Okay, so it's tapped into that zone. So yeah, this first level of price failed, pushed up, and then we've come to the second level of price. It hasn't had the strongest reaction so far on the monthly. So you'll also notice another thing is that we pushed up and then we did get some reactions to this last level that broke the structure but failed to close above it. What you'll see though is that again we failed to cement a low from here on the monthly. We tapped in, we pushed up, but we failed at this point to cement a low. No candle closed above the candle to its left and came back down. So that's another sign of weakness, that we're going to come lower at this point. So should really have been no surprise that this didn't work out. So what we've got here is a bearish chock on Bitcoin right there, so I'll mark that on as a change of character. And so we have what is our bearish substructural leg right there, and it's, I think, probably the first bearish change of character that Bitcoin has seen on this time frame. So we now have this substructural leg, and we have still failed to cement a low on the monthly. You can see here we had a reaction. This candle did not close above the candle to its left. It's now pulling back to the extreme. So I would most likely expect price to continue lower from here. Now, if we want to get deeper into this price, we could take a look at the lower time frames. So we won't go too low on Bitcoin here, but we could go to the weekly and see that if there's anything in this discount that makes sense for price to have a reaction to. So for me, we've still got our monthly markings here, but that just gives us a good frame of what we're working inside. So on the weekly, let's just get rid of that. You can see we've formed some structure within here. But if we go back, if you look at where to start mapping structure, this is what I do. I go back to find like order flow, and you can see there was a break here, and then we had some fairly clear order flow right there. Okay, so that is weekly major structure. We can just borrow one of these monthly lines. it's not too long, and use that to mark on that. So we have weekly major, and then we had another cemented high on the weekly there. You can see it closed below, candle to its left. And also something to look out for, we did not mitigate the discount here. If you zoom out, it looks close, but very key detail, we did not mitigate the discount. So remember that. So we can mark this next break as a minor break because we lacked that mitigation. And then we'll leave this tool here to remind us. And then we had this next leg of price. Do we get a re-establishment of order flow? No, what happens is this minor leg of price is broken over here. Okay, so what happens after that is we come down into this unmitigated discount area, tap in, and push up from there. So that's a nice sign that Bitcoin respects the rules that I lay out for supply and demand and mitigations of premium and discount, because it has broken that minor, come into that unmitigated major leg where we re-established the order flow, and it ultimately shot up from there. Now you can actually fractally see the same thing happening within this substructure that forms. So what you'll see here is that we had a change of character right there. We pushed up, okay, creating substructure, cemented high, and then we failed at this point to mitigate this discount area. Then price pushed up, continued up, so that's a minor substructural break right there, and then price came back down here, creating bearish substructure. And what did we do? Well, we came down into that unmitigated substructural discount, tapped into a valid zone and shot up. So you can see that's fractal. That is the same thing happening within swing structure and within the substructure that forms. And it's just classic price. So again, that's a nice sign that Bitcoin does respect the law of the land. Okay. Now with this in mind, what we have on the weekly is still the same swing low down here as the monthly, but we also cemented a high here. So we've got a smaller range for discount, not much smaller, but slightly smaller. That first zone still tapped into the weekly discount and pushed up. But does this really seem like an area to get involved with? Anyway, we then pushed further down. So we know that we've got unmitigated swing structure down here, and we know that we've got unmitigated substructure as well. But again, looking at the actual major substructure, we just have kind of the same, almost the same leg as swing structure, so that doesn't really help us. But we can break down the substructure even more by looking at the substructure within substructure. So right here, after we turned bearish with substructure, we also got a chock within the substructure, and we can go down as small as we like with the substructure. So looking at this, we've got another chalk with substructure. So we can mark down this substructure within substructure. And the point of this all is just to refine down to areas that are unmitigated. And now what we've done here is found ourselves an unmitigated discount area within the unmitigated discount of the weekly swing range and the monthly. So this is what we're doing. We're refining down our zones to the most high probability areas. And now you could just literally, because there's quite a few zones in here, you could go, right, I'll just take that whole discount area. If price taps into that, then I know that that is a super high probability area to get involved with starting to buy Bitcoin again, because we can just expect a strong reaction from there. Now currently at the moment, this is that area that we've reacted from on the monthly. Could price just go up from here? Potentially, yes. Is it the most high probability area for price to go up from? No, I would say this was. This may make sense in a lower time frame. It is a valid zone after all. It looks like, if we look at this, we had some movement down, movement up, movement down. It looks like there was probably on a lower time frame some kind of re-established order flow here. So, you know, reaction wise, it does make sense. But we also did see on the monthly that we failed to cement a low so far. We did cement a low on the weekly, and we could expect weekly substructural pullbacks. If we look at the weekly now to determine, this was the monthly change of character, but we actually had a much higher up weekly change of character here. Our first weekly substructural leg was cemented here, failed to mitigate that premium. Okay, keep note of that for potential future. And then we had this re-establishment of order flow on with substructure here. Let me just steal some substructure lines from over here. So that first was a minor substructural break, and then we had re-establishment, so that's a major substructural break. And looking at price, this was the last unmitigated substructural leg. So really our expectation would be, after this cemented weekly low, to pull up to here. Okay, at least to here. But we can only wait and see what happens with that. It certainly could happen. We've had a push up, a pull back down, and now we can actually see, we'll zoom in on the daily to see if this makes sense here, if we are within unmitigated areas or not. Now I would say that this all looks fairly mitigated on the daily. We've come up, mitigated valid zone, we've again, we didn't push up until there, so we actually, that's our leg. We came down, mitigated a valid zone, and then finally came here. And now we've actually broken that last area that was mitigated. So actually on the daily, framing this up, this is all kind of mitigated, and I would actually consider that this is likely to be taken because it's all mitigated on the daily. So that's what you can do. You can look at lower time frames to see if it makes sense, if there are areas that are unmitigated there. In this case, it just looks like price is probably going to continue to fall now that this last unmitigated area has broken. So back to the weekly. Because we can assume that price is coming lower, I'm not saying it's going to immediately just drop down here. It could take a year or more to come down here. But what I'm saying is that this is a high probability area for buys if price gets down here. And now that is starting at around or just over $8,000. And that is obviously quite a sharp drop from 19,000, but at the same time, not as sharp a drop as from around 70,000 or 69 all the way down to, 17,000, which is the most recent low. So yeah, that was a little examination of the price of Bitcoin, something a little bit different. I hope that was valuable in some way. But yeah, it's just interesting to see price kind of respecting the same rules on something as wild as this, and as, I guess, new. It's not that new anymore. As Bitcoin, we see the supply and demand concepts and rules, and the major and minor and mitigations and order flow still have their place, and that's because it's all just based on the logic of how people work, and how supply and demand and how markets work. So yeah, keep it in mind. This stuff works for everything, and this isn't a signal, but if price does come down here, I would say get involved. Anyway, hope you're all well, guys. Have a good weekend, and I will see you later.